The foreign exchange market, also known as the Forex market, is a decentralized marketplace where currencies from different countries are traded. It is the largest financial market in the world, with an average daily trading volume of over $5 trillion. In the Forex market, one currency is bought while another is sold simultaneously. The value of one currency is determined by its comparison to another currency, and the exchange rate between the two currencies is the rate at which they can be exchanged. The Forex market is open 24 hours a day, 5 days a week, and allows for trading of currencies from all over the world. The market is decentralized, meaning that it is not controlled by any single institution and instead is determined by market forces of supply and demand. To start trading in the foreign exchange market, also known as Forex, you will need to follow these basic steps. Before you start trading, it is important to understand how the Forex market works and the factors that affect currency exchange rates. You can learn about the market by reading books, taking online courses, or attending seminars. Choose a broker. Forex trading is typically done through a broker or a market maker. You will need to research and compare different brokers to find one that meets your needs. Make sure to check the broker's regulatory status, fees, and trading platform. Open an account. Once you have chosen a broker, you will need to open a trading account. This typically involves filling out an application and providing identification and financial information. Fund your account. To start trading, you will need to deposit money into your account. Most brokers accept a variety of funding methods, such as bank transfers, credit cards, and e-wallets. Practice with a demo account. Before trading with real money, it is a good idea to practice with a demo account. This will allow you to familiarize yourself with the trading platform and test your strategies without risking any real money. Start trading. Once you feel comfortable with the market and your trading strategies, you can start placing orders to buy and sell currencies. Keep in mind that Forex trading carries a high level of risk and can result in significant financial losses. It is important to note that before you start trading in the Forex market, you should have a sound understanding of the financial markets, the currencies, and the underlying economy. A sound understanding of the technical and fundamental analysis is also important. Trading in the Forex market can be profitable, but it also carries a high level of risk. It is important to be aware of this risk and to only invest what you can afford to lose.